Welcome everyone to Parag Milk Foods Q1 FY19 earnings call. Let me begin by introducing the management participants for today's call. So we have with us Mr. Devendra Shah, our chairman, Mr. Vimal Agarwal, our CFO, Mr. Shirish Upadhyay, who's an advisory to the team, Akshali Shah, who's our VP Strategy, Marketing and Sales, Amarendra Sathe, who's our Chief Commercial Officer. We also have with us the head for sports nutrition, Vinay Jain, head for institutional and Horeca, Mr. VPS Malik, and a representative from Vector. I also have on the call Deepak Jain, who's a senior manager in finance, and myself, Natasha, along with our investor relations advisor, SGA. I hope you've all got a chance to look at our financial results and presentation that was uploaded on the stock exchange as well as on our company website. Let me start with an update on the overall dairy FMCG sector. India's dairy FMCG sector is valued at $110 billion, which is largely driven by rising urbanization, changing consumer lifestyle, higher disposable income, and growing youth population. We have seen the emergence of two structural themes which will drive this multi-year growth in the industry. The first one is the shift from the unorganized to the organized market, and the second is the consumers' changing habits. In the organized sector, Parag has achieved significant success in value-added products, a segment that the unorganized player cannot compete in terms of quality and range. Furthermore, we are expecting FMCG demand to pick up on the back of good monsoons, government schemes to boost rural demand, and stability post-GST. The trend is also shifting towards health and nutrition as consumers are now becoming health conscious. This is leading to people consuming more milk and milk-based products, especially products made from 100% cow's milk. We, being the only company in India with 100% cow's milk products, we are set to benefit the most. Moving on to the company's key updates. As you all know, innovation has always been a part of our DNA, and it has been our constant endeavor to find new ways to meet the ever-changing needs of our consumers. To ensure that our momentum of enhancing the value-added products portfolio continues, we have launched several products recently. Parag has announced the launch of Govardhan Mishti Doi, a premium product under the fresh products category. The launch of Mishti Doi is an effort to expand the Govardhan portfolio into new product categories like desserts and expand our fresh products portfolio. This product is available in modern trade and general trade outlets in all metros in an 80-gram pack. Parag has also launched a new variant in whey protein called Advanced Muscle Gainer under the brand Avatar. The product is specially designed to support lean muscle gain with controlled fat levels. The product is available in the flavors of rich chocolate and in pack sizes of 3.3 pounds, 6 and 10 pounds. With the launch of this product, we have moved one step forward in establishing a product portfolio in the health and nutrition segment. Further, Parag has also introduced Go Colo Power, the first 100% natural immunity booster in the health and nutrition segment. This product is made from colostrum, which is the first milk of a cow when she gives birth to a calf and is rich in immunity boosters. We have collaborated with Coloplus AB, a Swedish research organization, to launch this product under the patented recipe. Colo Power will be available in e-commerce platforms and in all metro cities in a 200 grams pack. We have also strengthened our cheese category with the launch of Go Chocolate Cheese under cheese slices. The product is mainly targeted towards kids and is available in retail and modern trade outlets in India. It will be promoted through a 360-degree campaign that will commence shortly. In this way, we have maintained our momentum of enhancing the value-added product portfolio. I would now like to hand over the call to Mr. Devendra Shah, chairman of our company, to share his thoughts on the current business, which will be followed by an update on financials and then Q&A from our participants. Over to you, sir.
Thank you, Natasha. And good evening. Warm welcome of the participation. We have started a new financial year on a positive note by achieving the strong numbers, which was driven by growth in our consumer products segment. This is an indication that we are on a track to achieve our vision 2020 of top line of 2,700 to 3,000 crores, EBITDA margin of 11 to 12% and ROC 18 to 20% by FY20. We are very happy to announce that our efforts to expand our geographically reach in the north and the east, we have commanded our third manufacturing facility in the North India post acquisition of the facilities from the Denon Manufacturing Foods and Beverages in Haryana, in Sonipat. We have completed all regulatory requirements and have command to supply of fresh curd and nearby the markets in Delhi and NCR. We will be closer to end consumers and will be able to cater to their requirements with a better offering of their choices. We are also looking at expanding this facility further by adding few more product lines. Several initiatives are being taken to improve our distribution plan in India, general trade, modern trade, and institutional markets. And I am sure this will bring substantial improvement in our sales growth. We did a pilot project and we have seen significant improvement on all parameters like a number of the outlets build, higher range of the products sold, and repeat orders by the outlets. We are on the track implementing this project in all major metro cities to boost its sales. The few updates on the industry that concern you all, we are focusing on the value-added products which comprise 2/3 in our turnover and are working on the strength of our brands. We are extremely proud to strong relationship that we have developed with the farmers over the last 2 decades. They have continued to be loyal with us and the current requirement of this milk is adequately met. In another development, the government of India, both central and state, are supporting to dairy industry and direct indirect to the farmers through the company like us. In particular, the government of the Maharashtra has fixed procurement prices milk 25 rupees per liter, which is a win-win situation for the both farmers. The recent government policy by the Maharashtra government will also improve the overall quality of milk available. The government has also announced they will be providing 10% subsidy on the export of milk and milk products. We believe that this move will be boost dairy exports from the India, which has dried up into the past due surplus global prices. Parag is well placed in the benefit from the same, which will lead strong double-digit growth in the export. Government of India should be explore and further increase such benefits to support the industry. Lastly, I would like to thank the entire team of Parag of their commitment towards building this company into the FMCG company. On back of all above initiatives and support from the team, I once again reiterate that we are on the track to achieve the guidance as per our vision 2030. Now I will request to Vimal Agarwal, our CFO, to discuss our final performance for the quarter ended 30 June 2018.
Thank you, Devendra sir. Good evening, ladies and gentlemen. With respect to the company's financials, please note that the financials are prepared in accordance with the company's Rules 2015, that is, Ind AS, prescribed under Section 133 of the Companies Act 2013. Now, I'll take you through the financial performance for quarter ended June 30th, 2018. Consolidated revenue from operations for Q1 FY19 stood at rupees 5494 million as compared to rupees 4129 million for Q1 FY18, representing a growth of 33% YOY. Growth is primarily driven by key categories like cheese, ghee, paneer, and others. Revenue from our milk products in Q1 FY19 was rupees 3632 million, representing a robust growth of 41% YOY as compared to rupees 2578 million in Q1 FY18. The share of milk products for Q1 FY19 is 66% of total revenue, while the share of liquid milk is 19% of total revenue. Share of FMP for Q1 FY19 is 13% of overall revenue. EBITDA for Q1 FY19 stood at rupees 597 million as compared to rupees 285 million in Q1 FY18, resulting in a growth of 109% YOY. The EBITDA margin stood at 10.9% for Q1 FY19 due to operating leverage and high capacity utilization. PAT for Q1 FY19 stood at rupees 283 million as compared to rupees 105 million in Q1 FY18, resulting a growth of 169% YOY. The PAT margin stood at 5.1% for Q1 FY19. In this quarter, we have endeavored to improve our working capital through continued focus on all key levers associated with inventory and debtors. With all these efforts, our working capital has remained in check. This is all from our side, and now we can open the floor for Q&A. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question at this time, please press star 1 on your phone. The first question is on the line of Nitin Gosar from Invesco Mutual Fund. Please go ahead.
Hi, team. My first question is pertaining to the top-line growth. The Sonipat acquisition that we did, does it get factored into the current quarter's reported number?
The current acquisition which we have done of Danone facility in Sonipat has started commercial production from July 2018, and to that extent Q1 number does not include any revenue from this facility.
Perfect. And what's the reason for the quarter-on-quarter dip in gross margins, sir?
The drop is not significant if you notice, and that's largely driven by our focus on driving the value-added product business apart from expanding in all key categories. You will observe that the revenue is at an all-time high of about 550 million, and one of the key driver is the investments which we have done in trade, which has led to some dilution in percentage terms so far as gross margin is concerned. And otherwise, in terms of absolute rupees, I'm sure you would have seen that the numbers are looking very strong.
Correct. Just trying to understand this more granular. Gross margin, percentage-wise, Q-on-Q dip, does it anyway get captured because of higher margins that you give to the trade channel over here?
Not really. The overall margins which we pass on is the base margin, and then over and above, Parag or any other company runs a lot of trade promotions and offers to boost the volume. Okay. And that, I just want to mention that will continue. For example, you have investments in Big Day coming in August, and those kind of promotions will continue to be operated in key channels like modern trade across all important categories for us.
Okay, so these trade promotions which you are running over and above the normal margin, are they getting captured in the top line? Are they getting deducted from the top line and then you are reporting the top line? That's the understanding?
That's absolutely right, yeah.
Okay, got it, sir. And sir,
I'm sorry, sir. May I request you to return to the queue for any follow-ups?
No problem, ma'am.
Thank you, sir. A reminder to the participants, please limit your question to 2 per participant. If time permits, we will come back to you should you have any follow-ups. The next question is from the line of Dhruv Agarwal from Crescita. Please go ahead.
Good afternoon, sir, and congratulations on a good set of numbers. So my question pertains to the interest and depreciation expenses. Like year on year, they have increased about more than 25-30%. So the quarterly run rate which we see for the first quarter for interest and depreciation, is that expected to continue for the remaining 3 quarters, or will it increase going from here?
The last 4 quarters, if you look at the last 4 quarters trend, overall interest has been in the range of about 100 million or say 10 crores, and that we expect not to increase as we go into subsequent quarters. In fact, if you refer back to the earning call which we had last time, we had talked about the key reason or the rationale for increase in this expenditure last quarter versus the YOY. So that will stay, but I don't think that's going to go up. Now on depreciation, there are a couple of points. See, one is, so next 1.5 years, our guidance is that we are not going to invest in the capacity expansion, and that guidance stays. Having said that, last year there were a few investments which were made during the year, and the depreciation increase which you are seeing right now is more of a catch-up versus on a lower base. That's the second point. The third one is the only investment which we are now making is one is Sonipat plant, and the second is more like a maintenance capex, but no capacity enhancement outside of Sonipat plant.
Okay. And the 30 crores capex which you were supposed to do in Sonipat, has that been completed?
It had two parts. See, one was the acquisition from Danone, that is absolutely completed. The second one was really looking at the opportunities in Delhi NCR, and then investing the balance amounts. We are making few investments, and as we complete our research in that geography, and if need be, we will go ahead and spend the balance. So about 60% has been invested till now.
Okay, so out of the 30 crores, 18 crores is, you are saying, is what is invested till now?
Yeah.
Okay, and so one last thing on the tax front, for full year FY19, what do you see the tax rate accruing to the company?
It should be again closer to the number which is in the range of 26 to 28.5.
26 to 28.5. Okay. Okay, thank you so much.
Thank you. The next question is from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Sir, on the interest part, the debt, what would be the debt number on QOQ basis?
Our debt number will be closer to 260, 270 crores.
This is net or this is gross?
It's the gross.
Gross. Has it increased on QOQ basis because interest is up? So I'm just wondering.
Not really. 5-10 crores here and there, Pritesh, but not really.
Okay. On the volume growth side, if you could share what would be the volume of milk processed in the quarter and versus the same quarter last year, which will give some indication on volume growth.
So the overall milk which we would have handled or processed broadly on an average will be closer to 13 lakh liters a day. And that's a growth. So I think the last quarter on quarter we were about closer to 10.5 lakh.
Quarter on quarter means YOY, right? Same quarter last year.
That's right, YOY.
Yeah, okay. And on the gross margins question side, so we have whey which has also got added in the revenue numbers. And when I look at the mix on QOQ basis, it is more towards value add. So then what explains the 200 basis point reduction in gross margin?
So far as the whey is concerned, we continue to do well and build that category. And again, it's in sync with our guidance for FY20, where we are saying that health and nutrition will be closer to 6% over the next 6-7 quarters. That's not a challenge. So far as gross margins on whey as a category is concerned, that's above average. That also is not an issue. And to that extent, this category is not impacting gross margins for us.
Sir, it should improve, right? Why should the gross margin on QOQ basis, QOQ reduce 200 basis points?
Yeah, okay, Pritesh, so what happens is your mix of whey in the overall portfolio is very small. So irrespective of whether the margins are high or low at this stage or in this quarter will not have a significant impact on the gross margin at our organization level.
Even your value add is on QOQ basis is high, so despite that the gross margin is lower. So is there any other observation on it?
No, that's the key observation. In terms of channel level split, and all of those are largely the same. The key aspect is really the money you have invested in the trade to build the overall distribution. That's the key driver.
Okay. And what?
I'm sorry, sir. Request to return to the queue for any follow-up questions. Thank you. The next question is from the line of Dikshit Mittal from Shubhkam Ventures. Please go ahead.
Yeah, good evening, sir. So my question is on milk pricing, because recently government is trying to lift up the prices by export subsidy, or there have been talks that some MSP sort of mechanism may come in. So what are your thoughts, and will it impact our procurement cost, like if it happens?
Already I giving the guidance in my opening speech. This situation is only in the Maharashtra for the few months, from the last few months. But right now, government taking very positively. They are giving the 5 rupees incentive direct to the farmer through the product manufacturing units. And it's a help to the farmer to increase their milk production and stability for the farmer. And it's a help to the industry also and consumer also. Yeah, this is a very good golden opportunity. This is a support by the state government, and again, in the international market, central government giving the 10% to export increase in subsidy.
Okay, so this 5 rupees is being given by the government from its own budget?
Yeah, for next 3 months.
Okay, and any MSP kind of sort of thing happening? Do you see that happening in the near term?
From MSP standpoint, we have not seen any guidance, and we don't expect any guidance to come in so far as the Maharashtra state is concerned.
Okay. Thank you, sir.
Thank you. Next question is from the line of Dimple Kotak from SKS Capital. Please go ahead. Dimple, your line has been unmuted. Please go ahead with the question. There seems to be no response. We move to the next question from the line of Mehul Desai from IDFC Securities. Please go ahead.
Hi, sir. Thank you for taking my question. My first question is on the revenue front. When you say the milk products have grown about 41% and it is largely driven by cheese and ghee, is it fair to assume that cheese and ghee, which are your major contributors, have also grown at the similar rate, or is there any other product line which has grown much above 40%?
No, so see, there are two key categories. One is ghee and cheese, where we have seen very strong growth. Then there are smaller categories like paneer and ghee, where the growths are extremely high, and those two are also contributing in this growth story.
Okay. And so what is the others in this, the fourth segment which you have?
Others is largely the conversion charges and some other revenues which we generate from Bhagyalakshmi Dairy Farm, like cattle feed, manure sale, and etc.
Okay, understood. And just lastly on this this top line growth that you have achieved, how, in your sense, how much has this come from your own internal initiatives in terms of portfolio and distribution expansion, and how much would you attribute to actual improvement in the demand environment?
Basically, we have improved our distribution in across India. So you can say maybe 30% of the total growth has come from the distribution expansion. 70% is because of the improved requirement from the market or brand established, and there is a high demand in the market. We have just started our distribution expansion. So I think in coming 2 quarters, the result will be more because of the distribution, but the current growth, 70% is because of the higher demand from the market itself.
Sure. Got it. Thank you so much. Thank you.
Thank you. The next question is from the line of Anirudh Joshi from ICICI Securities. Please go ahead.
Yeah, hello sir, just one question regarding this subsidy mechanism of 5 rupees. So how it will be calculated, because we source the milk based on the fat content and the subsidy is based on the number of milk liters. So how are we going to do the accounting for this?
The subsidy of rupees 5 is based on 3.5 fat and 8.5 SNF, and that's the key criteria which will be used. Any sort of lower quality than the stated standards will lead to the deductions the way it has been done in the past. So 5 rupees is on 3.5, 8.5 criteria.
Okay, and so if I understand correctly, so we would be paying 25 rupees to the farmers, and then the government will give us 5 rupees. Is that correct? So net we would be procuring at 20 rupees. Is it correct?
Earlier, we are paying around 22 to 23 rupees.
Okay.
Yeah, and now this 5 rupees, we pass it to the minimum 25 rupees to the farmer.
Okay, so so what would be our procurement price? Means it will be 27 rupees, and then we would be getting 5 rupees refund from the government.
Yeah,
right?
But we are paying to farmer. There's a minimum 25 rupees.
That's right.
Okay, and so this is only for a period of 3 months.
3 months.
I think the key point to note here is that subsidy is not for the entire milk procurement.
It's only for the value-added product, which made into the Maharashtra.
Okay, so pure milk business will not be required. There will not be any subsidy.
No.
Okay.
But you have to pay for 25 rupees to the farmer.
But then those who are in pure milk business, they will still have to pay 25 rupees, but they will not get the 5 rupees benefit from the government.
Yeah, absolutely clear.
So yes, sir, this is clear advantage for the product companies like Parag.
Value-added product for the value-added companies, and it's very beneficial to the Parag.
Okay. Okay, sir. Yeah. Thank you.
Thank you. The next question is from the line of Dimple Kotak from SKS Capital. Please go ahead.
Yes, sir. Congrats on a good set of numbers. And how is the growth trajectory going across in the next 9 months? Is it similar to what we have shown? That is one. And second is that, sir, from the Danone facility, what kind of revenues and margins are we expecting for this year and the next? And what is the distribution like? Distribution model like?
Distribution model
for Danone, sir.
So far as the overall volume of the trajectory is concerned, I request to refer back to the May 2018 investors presentation, where we had said that we will target to achieve 2,400 to 2,700 to 3,000 crores over the next 2 years. So that guidance stays. And so far as Danone is concerned or Sonipat factory is concerned, we right now are building up overall distribution network. There are distributors are being appointed, sales people have been hired, mapping has been completed. We are waiting for the product launch, which is due in week 3 of August. And subsequent to that, we should see revenues starting ticking down from Sonipat plant. Apart from it, yogurt or cup curd facility, for which the plant was acquired, that manufacturing has already started, and we are distributing it through our existing GT and MT model.
Okay. So fair enough. So for this year, what is the potential of revenues from that facility, from the cup curd and whatever operations we are doing from the Sonipat plant?
We should be able to generate upwards of 60 crores or 70
60 to 80 crores.
60 to 80 crores. Okay, sir. Sure. And sir, one more thing, colostrum, it is there online, but there is a lot of unorganized market also, like Keva is there and iHerb is there. A few more are there which are available on the online platform. So what is the kind of competition from colostrum? I mean, I know it's very nascent stage, but still, your thought process?
Yeah, so the colostrum we have developed and launched into the market is based on a patented technology and recipe wherein you get 100% absorption of the nutrients which are there, and also the nutrients remain intact during the processing stage. And that is comparatively a much superior product than what is available anywhere in the market.
How do you, I mean, to the customers, how do you justify that, sir? Because there are other products also on the platform.
No, let there be other products on the platform. So you will always have two extremes which will be there.
Okay, and we have not...
I'm sorry, ma'am, I request you to return to the queue for follow-up questions.
Thank you so much, sir.
Thank you. Next question is from the line of Amish Kanani from JM Financial. Please go ahead.
Yeah, hi, sir. Congrats on a good set of numbers. Sir, my question is, we have seen a couple of brands being launched in the last 6 months. The question is, some is launched under Go or Govardhan mother brand, and some, we are creating a new brand. So what is our, philosophy of doing this? And, because now we have 7 brands, so, Slurp also was a separate brand, and now Avatar. So how do we, kind of justify volume, because they are all niche brand? So advertising and, distribution-wise, how do we justify a launch of new brand? We are not pan-India as well, so how do we create then the, mind space of the consumer?
Okay. Hi. So our branding strategy is very clear. So if you see, all our traditional products are branded under the brand name of Govardhan, where, products which are a little bit more Western-centric are under the brand name of Go. And Avatar is a complete different category, which is also health and nutrition segment that we are trying to meet. We've done our strategy saying that we meet all strata of people. Somebody who's consuming traditional food, they would be having products from Govardhan. Somebody who's more on bodybuilding, we want to keep it very separate. We don't want it to come in from the same because the consumers are very different for different segments.
So in that context, the Slurp and Avatar, which are relatively small size brand, if you can just give us your marketing strategy and how do you take that brand to a reasonable size where our advertising is supported.
Okay, so our advertising and marketing would be a total of around 9.5%, where 8% is used for trade level and 2.5% is used for the marketing and the advertising spends. Avatar is one of the niche categories where we spend a lot on influencers, where we spend a lot on social media. So the amount is really small. We tend to do activities which are more better because the target is the target audience is very easily met through gyms or through selective websites. So we've been doing the right things there. When it comes to Slurp, we want to keep it completely different from the milk category, because we don't want our consumers to know that it has milk. The perception of mango drink is supposed to be refreshing, and we don't want it to be. So moments where there's a milk aspect coming, there is like a premium perception. So we don't want that to have a rub-off for Slurp, and hence, so for Slurp we do a lot of outdoor, a lot of trade-related stuff, and it's helping us in distribution of our other beverage categories, milk-based beverages like Top Up and Buttermilk, Lassi.
Is it possible to give us within the guidance of 2,700 to 3,000 crore, how big is this two brand can be? Just if it's possible to break up that, how big that these two brands can be.
Okay, so we are not giving out breakup brand-wise, so we won't be able to share that with you.
Okay, no, sure. Thanks a lot and all the best.
Thank you. Next question is from the line of Pragya Vishwakarma from Edelweiss. Please go ahead.
Yeah, so my first question is on the procurement side. What was the average procurement price for the quarter? I understand that the government has introduced, that 25 rupees minimum price, but for the entire quarter, what was the average price?
Basically, the only point on the procurement price is it really varies, and therefore I will not be able to share one number. We have got 2 manufacturing sites and 4 states from where we are procuring, and the quality of milk plays a critical role in arriving at the price. So the range will vary anywhere between 21 to 23 or 24, and at times it has gone as high as 26, 27. So not possible to share one number on milk procurement price.
Okay. My next question is on working capital side. So, as you said that 30% of the revenue growth may be attributed to the increase in distribution. So, like going ahead, do you see a working capital increase in next 1 to 2 years as you go heavily on increasing your distribution and pan-India presence?
No, so here the endeavor is to ensure that working capital does not grow at a pace at which we are seeing our revenue growth. And when we talk about distribution, from inventory standpoint, we do not carry any inventory at distributor point, and that should not impact us. and that's how we are working. So we should see working capital growth at a pace which is much, much lower than the revenue growth which we are seeing right now.
Okay, so my last question is, like, as you said, we are on a pilot basis in new areas. You are applying that TOC model. So what is the progress in like next 1 to 2 years? How much of benefit do you think will come to distribution and because of this entire project?
We have just started a pilot in one area of a metro, and that pilot has shown us a very great growth. We have seen somewhere around 60 to 70% growth over last quarter in the absolute volume as well as coverage. So obviously, we will extend this pilot to another distribution in maybe second set of town, and then definitely within this year we will scale up to the major towns.
Okay. Thank you. That's it from my end.
Thank you. The next question is from the line of Bhavin Cheda from Enam Holdings. Please go ahead.
Sir, in case of accounting for subsidy of 5 rupees, how have you done in Q1 results?
So, Bhavin, the subsidy has been announced with effect from 1st August 2018. And to that extent, our quarterly result does not capture any subsidy portion.
Okay. And just to understand from the earlier replies what you gave, so accounting would be, you would be having a procurement price which would be higher, and then later on you would receive 5 rupees from the government, right?
Yeah, in terms of functionality, you are absolutely right. In terms of accounting, we need to really sit down and understand how the overall mechanism will work. So we'll take probably 4-5 days before we really finalize the overall modalities on accounting.
And you said this is only for 3 months of procurement from August 1 to October?
Yeah, see, the announcement has come in post deliberations and discussions with industry representatives, including Parag. Input from government right now is that the subsidy is for 3 months, but indications are that it is expected to be increased or increased to subsequent quarters as well.
Right, second. And second question, what was your milk procurement number for the quarter?
When you say number, you're referring to the quantum?
Yes. Liters per day.
It should be closer to around 12.5, 13 lakh liters per day.
This is including the outside fat procurement, or you're saying 13 lakhs is now a direct number?
No, this is the direct procurement. Raw material is separate.
Raw material is separate. Okay. And second question, last question is on how much would be Qtr sales in the quarter, roughly?
Our health and nutrition.
Yeah, or the health and nutrition segment, if you classify that.
Health and nutrition segment, the last financial year was closer to 2.5%, and we have said that we will endeavor to reach 6% by FY20 on health and nutrition, which includes Qtr, which includes a couple of new products which we launched in this quarter.
Okay, thank you, sir.
Thank you. The next question is from the line of Arun Gia from Equity Capital. Please go ahead.
Hello. So my first question is, if you could provide the breakup, how much % of revenues come from these beverages total? And secondly, wanted to understand the overall market size of flavored milk and who are the competitors and how do you see the growth in that segment?
In terms of beverage, it is difficult to give separate figures. So I'm sorry, we won't be able to give you those.
And percentage-wise, how much they contribute in value-added products or something?
No. So it is part of value-added product portfolio, which contributes around 66% of our business.
Okay. And how do you see the growth in the flavored market segment? Who are the competitors?
Which market segment?
Flavored milk.
Yeah, flavored milk, there are lot of competition across the country. So there are one national brand, Amul, and as well as regional brands who are competing into different regions. So we are trying to differentiate ourselves with our pure cow milk offering as well as innovations in terms of flavors and packaging and other things as well. And that is how we are pitching us differently into the market.
Okay. So where do you, and value-added products, where do you see the growth, major portion of growth coming from? Only cheese or any other products?
So cheese have been our growth engine over the last few years, will continue to remain so. Going forward, there are three major categories that we have been banking on. Fresh products is one, health and nutrition portfolio is another, and products like beverages, UST, those are the third category. So these are the categories which are going to provide higher growth and give us sustained growth in this particular category going forward.
And currently the market size of this flavored milk is how much?
Flavored milk is a huge market. It will be difficult to give you exact figure as of now, but we can separately give out that figure to you.
Okay. Okay, no problem. Thanks a lot.
Thank you. The next question is from the line of Charandeep Singh from Girik Capital. Please go ahead.
Yeah, hi. Congrats on a good set of numbers. I wanted to ask, what is your total debt figure at the end of the quarter, please?
264.
And what was it at the end of last quarter?
It was same around, roughly around 7 crore here and there.
254 crore. And what is your average cost of borrowing at present?
It was actually 264.
264. Okay.
Crores, not 254.
Okay. And what is the average rate of cost of borrowing?
Our cost of borrowing really varies. For example, there are loans from World Bank, which is closer to 6.5%, and then there are other loans which will be closer to 10.5% as well.
Okay. So what's the average cost?
Should be about 9.5, 10.
9.5. Now, this is your working capital limit, largely. There is some term debt also.
This includes both.
Both, right. Okay, thank you.
Thank you.
Thank you. Next question is from the line of Jasdeep Walia from Infina Finance. Please go ahead.
Good evening, sir. Thanks for taking my question. Sir, in an answer to a question earlier on the call, you said that you're going to expand distribution aggressively this year. So can you give us some targets that you have set for yourself as far as distribution expansion is concerned?
So overall, again, refer back to the presentation which we had on the in the investors meet. We, as of now, are covering approximately 2.6, 2.7 retail outlets, and our target is to add about 9 to 10,000 outlets a month on distribution front.
Okay, got it. And so this 5 rupees of subsidy which is to be paid by the government, now can it happen that, as we have seen in other sectors, these subsidy payments are delayed for like sometimes 6 months also. So can that kind of payment cycle happen in your case also? As far as
this is in government interest, in their interest. They committed to us every 10 days cycle. Once you pay and they reimburse it immediately. They suppose in next bill they are not reimbursing, you don't forward to the farmer. That's their commitment. Yeah.
Got it. And the last question from
because
my side.
Farmer agitation against the government.
Got it. And so how have the receivable days moved in the first quarter? Have they increased because of this high growth in sales, or have they remained at par with last year's levels?
It's largely at par with last year levels.
Got it, sir. So can I ask one more question, or should I come back in the queue?
You can ask.
Yeah.
So just wanted to find out what's the value of SMP inventory that you're holding right now, and how have you valued the inventory? Is it valued at global prices, which would mean that you incur a loss possibly on every kg of inventory?
As the valuation bit is concerned, we have gone by the accounting principle which says that your cost of production or tenth realizable value, whichever is lower. So we have stayed with that principle in all the inventory valuations.
So as of now, realization is lower, so your valuation of inventory will be below cost?
Not really. There are actions being taken. For example, quite a lot of our component gets supplied to key clientele or the institutional parties. To that extent, we are pretty much safe. Shirish, you want to add anything to this?
Yeah, so basically two things is here. One is in terms of SMP, obviously, since there is a lower realization which is there into the market, that was the reason the milk prices were down. And that is the reason the whole subsidy game came into play. And therefore, effectively, because of lower procurement price, the cost of SMP or realization of SMP was lesser. But it is unjust to say that it has been sold at a loss, because nobody would like to sell it as a loss, and in this particular dairy business, it becomes impossible. So that is one part, and I think in terms of inventory, we already clarified earlier, it is very difficult to arrive at a particular figure for a particular product segment per se.
So what's the value of S&P inventory that you're holding right now?
We won't be able to give you that separately, sorry.
Got it, sir. Thank you. Thanks for taking my...
Thank you. The next question is from the line of Nitin Gosar from Invesco Mutual Fund. Please go ahead.
Hi, sir. Just one clarification on distribution expansion. You mentioned that you are adding almost 9,000 to 10,000 stores a month.
That's right, yeah.
Right now we are having touch point to the tune of 2.5 lakh retail. Is that right? That effectively would mean we are adding up 1 lakh to 1.2 lakh a year.
That's right. We are currently available in 2.5 or 2.6 lakhs outlet directly. These are the outlets we are covering directly. We are not speaking about indirect coverage.
So when you say about 9, sorry.
Yeah, and we will add around 1.2 lakh outlet in this physical year.
This is direct or this is?
This is direct.
Oh, wow. And sir, second question is with regard to ROC. I think you mentioned your ROC target of around 18 to 20%, but you also mentioned that you're not getting into aggressive capex mode, and your working capital is going to be at the lower run rate as compared to your revenue growth. I mean, if you put across the math, your ROC has to shoot upwards of 20%.
Okay, so as of now, guidance which we have given really is around 18%. And the efforts are being made to ensure that we touch that guidance for sure. If we deliver better, we'll be more than happy.
Oh, but within your working capital or within your capex, is there something which is going to not allow it to go upwards of 20%? I mean, is your cheese business going to pull it down, or is it something that is going to expand your working capital?
So far as the next 6 quarters are concerned, there is no capacity expansion which we plan to do outside of our Sonipat plant, which means that from capital intensity point of view, there is no change versus where we are today. And it's the first quarter post our guidance. Let's see how the next 2 quarters goes, and if any guidance is to be revised, of course, we'll go ahead and do that.
But both quarters are good.
Okay. And
I'm sorry, sir. I'll request you to please return to the queue for follow-up.
No problem.
Thank you. Next question is from the line of Nilesh Moria from Asian Market Securities. Please go ahead.
Hello, sir. Hello. Yeah. Okay. Sir, congratulations on a great set of numbers. Sir, my questions are 2. One is, sir, while we are talking about these good, healthy growth numbers, if I just break that down, it will be volume as well as value growth, right? So how easy? So what is your procurement strategy? How easy is it to actually ramp up your production in terms of procuring the milk from the farmers? So that is the first one. And second is it possible for you to give me the breakup in terms of the margins on your product categories like milk products, skimmed, liquid milk and others?
So in terms of our product categories, our value-added products, especially cheese, would be, so consumer overall would be around between 28 to 40% gross margin. Skim milk powder would be anywhere between 5 to 7. And liquid milk is anywhere between 10 to 12.
Okay. 10 to 12%, okay. Yeah, and on the procurement strategy, so because we, obviously when we are adding all these distribution networks, we'll have to really ramp up our production of we'll have to ramp up our procurement of the milk. So how easy is it? Because, I mean, there are competition as well. So are you going to pay higher to the farmers? How do we, what is the strategy there? Because we'll have to have more input.
Yeah, so here, to put it very simply, it is not that easy. It is very, very difficult in terms of increasing your procurement, and paying a little bit higher here and there is not going to work in this business. So we have to work intensively in terms of opening new villages, interacting with new farmers, and bringing them into the fold. But fortunately, we also have a legacy of last 2.5 decades and around 2 million plus farmers whom we have been dealing with, and that itself, the current base itself is growing at around 6% in terms of absolute production. So marketable surplus within that basket has been increasing by around 8 to 9%. And we are looking at an annualized growth of around 10% in terms of procurement. So we, number one, rely on our existing set of farmers to increase the supply of milk, and also go on increasing geographical coverage with newer farmers, newer villages into our fold, and that is how we try to keep pace with the growth that we are targeting.
Okay, so this will not...
sorry, sir, I would request you to return to the queue.
Okay.
Thank you, sir. The next question is from the line of Jayant Mamania from Care Portfolio Managers. Please go ahead.
Sir, in this present quarter, operating margins are around 11%, and the share of value-added milk products is on the rise. So what type of target you have set for operating margin for the current year and the next year?
The guidance for operating margin is to reach 11.5-12% by end of FY20.
Acha. Okay. Sir, can you tell us the top 5 milk value-added milk products in descending order which has contributed to value-added milk product sales? Like cheese, butter, ghee, flavored milk.
Our top 2 categories are cheese and ghee, followed by other categories like fresh products, beverages, UST milk, etc.
So which are our products are sold at national level?
All. Except liquid milk and pride of cows, everything is sold across India.
Okay. Thank you. Yeah.
Thank you. Next question is from the line of Kaushal Shah from Dhanki Securities. Please go ahead.
Yeah, thank you for the opportunity, sir. Given that the procurement price is now fixed at 25, would it be safe to say that our effective procurement price will increase by at least 15% in this quarter compared to the previous quarter, though there is a subsidy mechanism, but still effectively we will be paying 15% on an average more to the farmers, which will be, of course, be reimbursed through the subsidy, but that payout will happen to the extent of 15%?
So, Salva, here realization to the farmers have obviously increased. The farmer who was earlier getting, say, 18 to 20 rupees a liter is now getting an assured 25 rupees a liter for every liter of milk that he is giving. As far as we are concerned, as Mr. Saab was earlier stating, we were already paying around 20 to 22 rupees a liter, and now we are paying whatever subsidy that government is giving as an additional thing to the farmers. So for us, there is no effective increase per se in terms of rates.
Right. So from 22 to 25, so there is an effective about, let's say, roughly at 15% increase for us in terms of our base procurement price, which will be obviously reimbursed through the mechanism, whatever comes into play.
Yes. So we do not expect any incremental P&L charge in our books, just to clarify.
Followed. And the next question was, any tangible impact which you can share with us from the vector consulting initiatives which we have taken over the last 3 months?
So this is just a pilot and we just few months old. So not really, we are not really doing any analysis of this particular thing.
In Vector, we are actually focusing on expanding our reach in both, reaching more outlets and reaching out with more products in range also. So reach and range is our focus. So, as you said, that we're working on the pilot right now. So for the tangible impact to come, we should, I think, give it another year's time to see the results and we'll get back to you.
Thank you. That was helpful.
Thank you.
Thank you. Next question is from the line of Nidhi Agarwal from Angel Broking. Please go ahead.
Yeah, thanks for taking my question. I have this thing on exports. How much was exports last year and this quarter?
So exports are around 3 to 4% of our top line, and it has remained almost in similar range.
So do you expect any increment in this because of exports incentive?
Yeah. With the new subsidy in place, we look at some increment in terms of our export business going forward.
So could it be like 5%, 10%?
It is difficult to quantify at this point of time, but obviously there will be a significant increase that we'll be able to see.
And what will you export? We will exporting the milk powder or any value-added products also?
So for us, we have been always focusing on cheese, ghee, paneer, those kind of products, and that is what we would be continuing.
So exports for us would be more of B2C. These are directly branded products that we send across in different countries and goes in consumer packs and not in bulk.
And how will this 10% exports incentives will work? You get that on MRP or on your cost?
So it is basically based on the FOB value of exports that we do, and it comes in form of duty scripts.
Okay. And how has been the payment in this case?
So we immediately get the duty script and we can either redeem that duty script against statutory payments or sell it into the market.
Okay. That answers my question. Thank you.
Thank you. Next question is from the line of Akash from Marwari Shares. Please go ahead.
Good evening, sir. First of all...
Sorry, sir, your voice is echoing. Can you please use the handset?
Yeah, good evening, sir. First of all, many congratulations for generating good results. My question is about, getting sales distribution plant-wise. That is, what is the percentage sales for Muncher and what is the percentage sales for Palamnir for FY18?
We don't do it plant-wise. Ours is an FMCG company, so irrespective of what plant manufactures what products, it is all a sales-driven company.
Okay, sir. So can you give us some sense in terms of capacity utilization for both the plants for FY18?
Overall capacity utilizations are in range of around 60-65%.
Okay, so this would be 60 for both the plants, 60-65 for both the plants?
Yes.
Yeah.
Okay, but we'll not be able to give individually for Muncher and Palamnir.
Both are running at around 2/3, 65% sort of utilizations.
Okay. And sir, also, can you please guide us what was the per day milk procurement for FY18?
FY18 it was around 12 lakh liters.
Okay, 12 lakh liters.
Yeah, per day.
Okay, thank you.
Thank you. Ladies and gentlemen, due to time constraint, we'll be taking the last question from the line of Rahul Kumar from AA Investments. Please go ahead.
Hello.
Mr. Rahul Kumar, yeah, please go ahead with the question.
Yeah. Thanks for taking my question. My question is on Avatar Whey Protein. Your new product line, Avatar Whey Protein, is priced around 6,000 for 5 pounds, while Optimum Nutrition, which is considered best in the class cost somewhere around 5,700 for the same weight. For ON or other foreign brands, there is an import duty which increases the cost. So what is the reason that we have kept such steep pricing?
Okay. Hi, good evening. So basically, how we are priced in the market is, so we are about 5 to 10% lower than the imported one, though despite the fact that we are offering equally good or even better product. And we are about 10% more than the Indian brands. So that's how we price our products. Now, specifically to ON, so ON MRP for 5 LBS is 7,600 and we are priced at 6,800, so about 10% lower than ON. And the same is the case with other products too.
Okay. So, and how is the market acceptance and what are your marketing plans to make it popular?
So, market acceptance so far has been really good. We tested the product in Western region and some of the key metros in South, and now we're expanding the product to other regions and other parts of the country. So we are getting repeated demand of the products. Wherever we have placed the products across the store, we are getting repeated demand. So there's a sign of early success, and it is continuing. We are adding more products to the portfolio, and we are expanding channels.
Okay, so there are new upcoming products in the line, right?
Yes, yes.
Okay, thanks for the answer. Thank you.
Okay.
Thank you. I now hand the conference over to Ms. Natasha Kedia for closing comments.
I would like to thank all the participants for taking the time out to join us. Please feel free to get in touch with me or SGA, who are our Investor Relations Advisor, for any questions that you may have. Our coordinates are provided at the end of the Q1 FY19 result update presentation, which is uploaded both on the Stock Exchange and the company website. Thank you for joining us.